What is up, everybody? Thank you for joining me in episode 53 today, which is Friday, right before the long weekend. Remember, there is no trading on Monday. Now, I see patterns, I see numbers. What am I doing this weekend? I'm going to establish a new watch list. I'm scratching the entire watch list off. I'm going to find stocks just that have demand, just that have volume, stocks that we don't really have to worry about. Other than that, we'll try and gauge the market going forward. Other gurus, they go on and they talk about one specific stock, whether it's AMC, whether it's GameStop, whether I saw this dude doing a live thing on bingo. You can't just stick to one stock and just hold it every day. That's doing nothing. That's not investing in the market. So please, if you like, join my platform. There is a difference. I share lessons. I teach strategy. It's not about alerts. It's about doing the right thing, like the Spike Lee movie, all right? There are certain rules in place. They're all listed on my website. I'm going to go over some of the rules today after I give my little intro here, and we'll talk about a few stocks, but I'm going to simplify the rules for you. I'm going to help you figure out what you're doing wrong, okay? But here's what I'm asking you right now. Our community is closing in on 1,200 members, all right? Everything I do is organic. On Twitter, we've got about 5,500 members. Webull, 13,000. So please take a chance on yourself. Pay it forward. Join the family. Share this video with somebody else. All right, yesterday, my stream live, I spoke about following the rules. I explained the rules about options and how to average down. I also will do it in reverse. Made an options video. Episode 37, how to average down correctly. Then 42, how to get the max out of each of your options, whether it means you're making, closing the gap and making less of a loss or max profit. We want to wait. I'm going to give you an example today. And then there's video number 3, Ask Matt number 3, where I teach you about options, just simplifying it, making it easy for everybody, okay? Spend time. Spend 5 hours this weekend. Watch those videos. Educate yourself. Make yourself a better trader. That's what the goal is, okay? Now, understand, my tweets are not always about the stock going up. Sometimes it's about saving money. I'm going to give you an example. Triteris, right? A couple of days ago, it spiked to 7 off heavy volume, 1.4 million volume. Generally, it does about 300 to 400,000, which I told you guys, I can manipulate a stock like that down. Unless there's good volume, when there's good volume, you can't really manipulate a stock. But I'll talk to you about another one. But that went down 6% yesterday, 3% today. So if you have options, you could have saved about 80%. If you have stock, you could have saved 9.5%. The point is, we secure profit when it spikes. Oh, let's talk about another one. One of my favorites, Sorrentino Therapeutic, SRNE, okay? It spiked yesterday to like $11. At 1066, I tweeted out that I was selling my options. I don't always call the best out. I try and get max value, right? So I got out at 1066. It spiked past $11. It held. You know where it is today? It's under $10. It's at $9.88. Or maybe it's like plus or minus 5 cents. The point is, I got out at $10.66. I secured like 69% profit. Some people in my platform stayed longer and got 100% profit. But then they're out. And when it goes back down, we have a chance to re-enter and build up our portfolio again. What other positions have I spoken about that I liked? Delta Airlines, I alerted, I think it was 1 or 2 days ago. It was $43.77. I know it's not way past there, but it's $44 all the way up to like $44.20, all the way back down to $44.07. The point is, it's holding $44. What positions did I enter into today? NNOX, right before the close, or about 20 or 30 minutes before the close, at $30.50. I bought $29 call options that expire July 16th. All right, tech stocks, 4-letter stocks, if they don't have revenue, like NNOX, like a couple of these other, like Tiger, they don't really have that great of revenue. They got hurt today. They were off 2%, 3%, 4%. You have to wait for a strong tech week next week, which I believe will occur, and then these stocks will bounce back. Let's talk about another stock, STX, right? Seagate Technologies. I love it. I have options expiring today, options expiring next Friday the 9th, and options on the 16th, okay? What do I expect? Volume is so low. I don't know where volume ended at today, but again, yesterday it was like 1/2 of its average volume. Today, I think it was like, again, 1/2 of its average. These stocks are easily manipulated. You'll see Seagate Technologies, STX, it went down all the way to like $86 and then popped up. All right, I had $86 calls. I ended up getting $1 out of them. But if I didn't know any better this morning, I would have probably sold them for 30 cents on the dollar. 30 cents or 40 cents instead of getting a full dollar per contract. I had over 100 contracts. So that's a big difference. That's like $6,000 to $7,000 difference. So when I tell you exactly when you want to sell your options, meaning we don't sell before 10:30 a.m. The spreads are too wide, okay? I think I talked about that in episode Ask Matt 47. You want to watch that and understand why we buy options between 10:30 a.m. till the close, okay? Based on the market direction, we try and get in the best positions. If you're averaging down at 40 to 50%, like I tell you, and it looks like it's going to drop harder, don't average down yet. Let it fall to like 62%. You're down 62%. Great. You double down on your position. When it pops back like a few percent, boom, you just made back your 30%. When you average down, you go from minus 50% to like minus about 22%. And then when it pops back 3%, the stock, your options spark back 30%. So you're already positive. If you don't average down on options, you're not going to be a successful trader. I'll give you, I'll wait on the example right there. So what other stocks? DDD, it dropped. I bought more before the end of the day. Same with Tiger. Tiger was beat up. I bought more at the end of the day. I still like XL. XL's probably what, $8, 8 something. I think it's still going to pop to $10.10 and other strong stocks that I like. Okay. We've mentioned them before in our platform, in our 349 community. eBay, I believe finished green today. Roblox, if it didn't finish green today, it should have a good week next week. Twitter and DDOG. I like DDOG. I like Net. I mentioned DDOG yesterday. I went into some long-term options. Oh, I'm going to tell you today how not to blow up your account, okay? This is pretty important because I must have received like 400 DMs on the side today. 100 of them, like a quarter of them, were telling me, I love your rules. Days like this, I know exactly what I'm doing. So I understand those people actually read the rules on my website. They plan ahead for the dips, and then they watch. When they see it dipping harder, they plan for that, and they're like, here's what I'll do. I'll enter with a 25% position. It doesn't mean you're entering with $2,500 or $25,000. It means if you have an account that's worth $30,000, right, you set aside $3,000, 1/10 of your account for this position. It doesn't mean you enter in $3,000 right away. What it means is you use about a quarter of that, 25%. So your first position is $750. If it goes down, then you put another $750 in. If it goes down, then you put another $1,500 in. There, now you have 4 positions in the option. Let me explain to you using math how that's going to work, and I'll do it with just 2 positions, okay? You buy an option for $4 or $400, okay? You don't average down. It goes down 40%, so you're down 40%. You're not averaging down. It goes back up to 420, let's say, okay? I love that number, 420. So $4 to 420, you make 5% on $400, okay? That's it. 5% on $400, and you're still probably holding the bags. Now, averaging down correctly, you buy an option for $400, it goes down to $260. Let's say it goes to $250, then back to $260. Okay, you're still down 40%. You buy 2 more contracts, so now you're in total $260 and $260, which is $520 plus the $400. So you're in for $920. Okay, meaning your average price is like $306. Instead of $400. So when it goes up to $420, you just made $1.14, or you made 35%. The point is, when it hits $420, you're out at 35%. The dude that bought at $400, he's still holding. He's only up 5%. And he only spent $400. He's up 5% on $400. When you average down correctly, now you're in for $920 because you averaged down, and now you're up 35%. It's a huge difference. You're talking about $300, right? Versus $20, $300 averaging down correctly, $20 if you do not average down correctly. All right, so real quick, I just want to pull up my how to blow up your account because, again, I received 400 DMs on this side, and I'm going to have to ask you guys, cut that down, or we're going to figure out a way to do it. But the point is, 100 of them knew what to do. Hey, look at this position. I just got in. Look, I'm already green. Hey, look at this. I bought this. I'm excited for next week. Hey, this is how I average down. Now, the other 300 were like, dude, I went all in on Tiger. I'm holding, or I went all in on STX and I sold too soon because I didn't listen to you. Yes, if you didn't see the STX chart, it fell off the face just like Micron and a couple others. But then you saw AMD going up, NVIDIA going up, right? It tells you these chip makers are going up. So all of a sudden, the light bulb went off in somebody's head and they started buying STX. And let's just see where it closed at. I think it closed at what, $87? I don't even need to look, but I will look anyway because I'm so curious. STX. Yeah, 87.03, and it's not down after hours. They don't really trade it after hours. The point is, Those who held, okay, like myself, I could have got 40 cents or $40 per contract. Instead, I got $1 per contract. So you're talking about a $6,000 or $7,000 difference. Okay, if you found good content so far, I'm going to tell you how not to blow up your account. But first, I'm going to ask you to look down and please just hit the like button or the subscribe button. Not everybody that watches me is part of our 349 community or family. All right, real quick. Why do I charge $349 a week? Because I want everybody, their brother, their sister, their mother, their friends to join my platform. I want everybody to become a better trader. It's silly if you don't know that much about trading and you're putting money in the market and you're watching somebody else on YouTube like Chris Sane or the Mass Trader or Kevin or Trey or whatever are these guys, Zip Trader, right? I mentioned everybody, I think. I mean, I'm sure I did not. But they speak about one stock or two stocks. They're telling you something that they made a video of 2 days ago. Hey, sell Snap. And then Snap goes up. And you're like, well, he told me to sell it. Now it went up. He did that with ChargePoint too, right? Sell ChargePoint. It popped like 10% 2 days later. The point is, these things have to be live. You have to analyze the market as it's happening, or else how do you know where the demand is? You just don't. So my point is, I want to teach you to track demand. I want to teach you to be a better trader. I want you to make the extra 5% on the front and an extra 10% on the back. If you made an extra 15% on every single one of your trades, instead of making 25%, you'd make 40. Instead of 65, you'd be 80. Okay, it makes a huge difference. Now, how to blow up your account, okay? Everybody's blowing up their account at some point or another. If you don't learn from it, then you can't move forward and you can't be a better trader. All right, so number one, don't throw good money after bad money. You bought an option position, it was $1.80. Now it's 40 cents. It's probably going to shit. So if you want to average down, which I talked about in episode 37, you'll go out a few weeks or a few months. You'll double the money. So if you put in 2,000, you'll put in 4,000, okay? And you'll average out. That way you don't need instant gratification. It doesn't need to turn around tomorrow. The option's worth 40 cents. It's probably bad. So you're throwing good money after bad money. Next, you're too smart for your own good. Meaning, the market just dipped real hard. You see it recovering. You're like, I'm going to beat everybody to the punch, and I'm going to jump in with options. And I'm not jumping in with 2 contracts. I'm jumping in with 20 contracts. Okay, so you're too smart for your own good. Then what happens? It was a fake out, and the market falls. And it ends today it ends like today, where some of your stocks are at your worst positions of the entire day at the end of the day. So you got too smart for your own good. So now instead of doing it the right thing and buying 1 contract, then 2, then 4, and taking it slow, okay? Instead, you're fully vested. You're 22 contracts. You double down. Now you're 40 contracts. You've never had so many contracts in your life, and now you're watching it, okay? I've seen this happen week after week, which is why for the past week, all I've been talking about are my rules. And if you follow the rules, it's a way to safeguard your account, all right? That's what it is. It's always risk management. The market's always going to be there. The profit's always going to be there. There's always money to extract from the market. But what you do not want to do is give them the money from your own pocket and your own bank accounts. That's just silly. That's silly. And you don't want to scare sell or have institutions. So if you're scare selling, it's because your positions are too big. If you have 60 or 80% in one options position, you're crazy, because if it doesn't recover, you're going to blow up your account. All right. You're averaging down too soon. So I'll use transparency for my example. Last Friday, I did a pre-market video and I said any 4-letter stock is going to be going down because the NASDAQ was going to get beat up last Friday. And it did. And what did I do pre-market? I bragged to you guys I was going to put in a cheap bid on Plug. And I bought like 10 contracts. And then at 9:39 a.m., I was down 22%. I bought like 40 contracts. And then at 9:59, I was still down like 32%. I bought 140 contracts. By 10:30, I was down $7,500. I had a lot of contracts, and I still knew Plug was going down more that day. I mean, luckily for me, I was correct about Plug. Monday was an up day. I held. Tuesday, it popped in the morning. I got that 5% that I mentioned we were looking for, and I sold for profit. But if I had waited, say I had entered into that position Friday afternoon before the close of the market, instead of making 30 to 40%, I would have made 90 to 100%. That's a hell of a difference, especially when you're talking about $20,000 or $25,000 of a position. All right. And last, compounding your bad mistakes. Okay. So you're in a position, let's say I say 4-letter stocks are going down, or even we'll say the Dow's going down. Okay. The Dow's going down, which means airlines are going down, casinos are going down, cruise ships are going down. So what do you see? You're like, oh man, Let me get on my airline position. So you sell your airline position and you lost like, let's say 30%. And now you're fumbling around. Oh, what am I going to do? What do I do? Oh my God, Win Casino looks like it's bottomed. So let me invest in Win Casino. But you just forgot. You told yourself 20 minutes ago that you don't want to be in any Dow recovery stocks. So you go from one to the other. You compounding your issue. You lose 35%. You go into your new position and then it falls. You were right. Dow stocks suck and it just fell. And now you're down another 35%. So you went from $10,000. Now you have $3,000 going into the weekend. You're like, oh man, if this goes down on Monday, I don't even know what I'm going to do. Then the weekend ends. It comes to Monday. The stock opens up down 3%. You're down to like $900. You scare sell. You pocket the 900. It rebounds and then rebounds some more. You would have been fine. But the point is you scare sold because you had too big a position or you averaged down the wrong way. All of these mistakes can lead to blowing up your account. All right. Averaging down the wrong way, putting yourself too heavily in one position, not leaving yourself enough time. For example, if my options expire July 9th, we're July 2nd today, they expire July 9th, you're not giving yourself enough time. Monday is a holiday, so we get back to trading on Tuesday. Let's say Tuesday your stock goes down. You have 3 days to rebound. Then you look at Friday and you say, Friday, I generally get scared, so I don't want to hold till Friday. Now you have 2 days. And then let's say the president or the Fed or somebody's going to raise interest rates or they start talking about something. You could get extremely hurt. That is why if you give yourself the extra time, you'll be fine. I mentioned yesterday, if you watched yesterday's episode, I mentioned I spent about $200,000+ and I bought a ton of long-term options. I bought Plug and Knox. I bought Apple. I bought, God, I wish I remembered. STX was one of them. But the point is, I'm outgoing long-term. I bought some Carnival and Delta for September and October and then also January. The point is you go out. I don't need to be in stocks. I can go out. Hit the like button and let's get into some slides. I only have a couple slides today. It's Friday, and then we'll get into some decent questions. Oh, before we do slides, never mind. I'll skip that point. All right, let's do some slides first. All right, yes. So this is how I made a small synapse of my rules, all right? When you enter a position, you don't want to use more than 10% of your total account. So if you have an account and it's $2,400, you don't want to put in more than $240. When you see everybody in my platform, say you join my platform and you're new to my platform and everybody's showing you returns like, hey, I had $500. Now I have $5,000. Or I had $2,000. Now I have $20,000. And you say, I want that. Max right every single trade. That's not true. My trades, my alerts are live or winning at about 82%. It doesn't mean every single trade I enter is a good trade. I mean, we try and I use my strategy. So it's not about the alerts. It's about the strategy. Point is, there are rules. They're all posted on my website. People that ask the same questions over and over in the forum chat room, basically, I want you to read the rules this weekend. The rules work. I give you examples, psychology, trading. I talk about a lot of things. Please, you're paying the $3.49 a week. Yup, cha-ching. And you should go to the website and actually get the full value. The same way when you're watching this video, and I know you want to be a better trader, I say to you, please watch the 5 videos I'm telling you about over the weekend. You have 3 days to do so. Make yourself a better trader. The videos are free. Next slide, please. All right, this one. He's been following rules and he can't complain. 2 weeks in, and I've had but major changes. Excellent. So what was that? Probably his weekly P&L? No, his monthly P&L. All right, so you can see, I mean, it doesn't take a lot. If he's making $2,800, we'll assume, he had a couple $1,000s in his account. He probably made 100% in 2 weeks. But again, we have to give time. I talk about zooming out. So when we go into a position, we're going into a beat up stock. When I mentioned I'm buying more Tiger options today, it was because Tiger was beat up. When I mentioned I'm buying DDD today, it's because DDD was beat up. I think it was off 6%. I expect it to pop. I expect it to rebound. As soon as DDD has a strong inflow day, which seems to happen once a week, I expect it to pop north of like $42. STX, let's talk about that for, you know what? I'll talk about my price targets after this. Let's go through more slides because I only have a couple slides today. Here's what my alerts look like. They look different than just, hey, this is a transparent trade. I always title them with alert, alert, alert. It's going on the spreadsheet. I believe this was like a day or two ago. Delta was 43.77. If anybody missed my alert at 2 p.m. that day, and I think it was yesterday actually, it went even lower than where I purchased it. So this is what my alerts look like. This one I believe is up like 15 to 18%. So it's not killing it. Oh, actually, Delta finished around $44. It's probably only up like 12%. All right, next slide, please. Always make guess. All right, STX, here it is. Here's what the chart looks like. This is manipulation. I can't see the volume, but it's definitely under a million. So it's under a million volume. The average volume is probably between 2 and 3 million. So what do? They wanted to pump it up in the morning, yet the institutions, everybody sold off. So it went down. And then what did you guys do? You scare sold. Any of these points you could have scare sold at, okay? Luckily for me, I took a nap. When I woke up just in time, because I wasn't feeling good, when I woke up just in time, it was approaching my 80-cent ask. So what did I do? I looked at the chart and I quickly changed it. I said I wanted $1.05. And then I left it. And then I said to myself, no, $1.05 is too much. It's probably going to have a hard time breaking $87. Let me just try and get $1. So that's what I did. And I sold. Now, if I held even longer, I could have got an extra 10%. I could have got an extra 10 cents or $10 per contract. At 110 contracts, that's like $1,100. Everything makes sense. All the percentages. So when I use my column, max profit. Now, if you don't know what max profit is, watch episode 42. I tell you about my secret column for max profit. When I do that today, I'm going to write that down and I'm going to say I missed max profit by about 12 to 14%. That'll help me the next time around. All right, next slide, please. All right, NNOX. Again, transparency. Here it is, around 239. NNOX was at $30.50 or 51 cents. I put in a bid on the $29 strike of July 16, which I mentioned earlier in this video, and it was $2.50 or $250 per contract, and it got hit. It must have dropped and then rebounded. I mean, it's not like NNOX finished great at the end of the day. No, but on the next inflow day, I could easily see NNOX. I don't know if it's 1 week or two. Again, next week is short, but I can see NNOX breaching like $34 or $35 by the end of the following week, which will be July 16th. So if that happens, and my strike is 29, I will get $6 per contract. Let's say I only get 5, it's at $34. I'm still making 100%. So every time I look at this, I want to make 100%. It's always risk versus reward. So I look at the downside. I say I could lose like 33% if I'm incorrect about it. If I'm correct, I can get 100%. So my ratio is 3 to 1. If I can get a 3 to 1 return on every trade and I trade at 80%, even if I don't get max value, which is, the 100%, I'm still going to be a successful trader, which is why I do this. I do this because I know my rules work. All right, is that the end of the slides? Let's try one more. Nope, that's the end of the slides. So again, I do this. I come on here. I charge nothing. Well, I charge $3.49, but I do it because I want to teach. I know my rules work. I know my lessons work. And if you trade them, again, you have to leave emotion at the side door, okay? You can't trade with emotion. So the dude that I spoke to today, John, he said, I was trading with emotion. I had a personal issue. I got angry, and I invested all my money in this thing, and I lost 50% of my portfolio today. You cannot trade emotion. If you're upset at your kids, if you're not feeling well, if you're not focused, if you're at work and your boss is like on your case, or you're at school and your students are bothering you, or something like that, you do not need to trade. It's all about trading the right way. I speak about a lesson where you have a gun held to your head and they say to you, Matt, is this going to be a good trade? Are you sure about that? Why are you so sure about that? You have to convince yourself it's a good trade. If you don't, and you're like, well, it might be a bad trade. If they continue to sell off, it'll go down even more. Whatever, I'll just do it. If you've ever said that, whatever, I'm just going to hit enter, I'll do it. Yeah, $4 sounds good, I'll just put it in. Then you're not planning ahead. You're not thinking about your trades. If you just decide, I'm going to buy Apple options 140 right now. What is it, 350? Okay, I'll bet 350. Boom. No, you have to plan ahead. You look at the chart and you're like, okay, the one-day chart, it looks like it might be able to dip. If it dips, it might dip 3%. If I'm going to buy this option, which is currently $500, and it dips 3%, I might be able to buy the option for $3.90 or $3.80, whatever the mathematical formula is. You use the delta from the option times the change in the price to get the reduction in the option price. But you put in to buy it on sale. We never pay full price. We never pay ask. We never on the spur of the moment go, okay, I'm going to buy. And then people on my platform, let me explain this real quick, okay? Because some people say, hey, what about your Fisker alert? It's not on the spreadsheet. And then somebody else said, no, his alerts have a little asterisk like I showed you earlier. His other trades are transparency trades. And what he does is he bites the bullet for us. No, I'm not biting the bullet for you. What I'm doing is I'm trying to call the bottom for myself. And I'm buying like 2 or 3 contracts. And when it goes down, and I'm down like 38% on the day after I bought 3 contracts that I've been speaking about, I know I'm about to double down with my personal account. And then I say to myself, let me look at the chart, limited risk, good reward. Let me tweet it and alert everybody. Yes, this one's going on the spreadsheet. Blah, 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 blah. I mean, the last buy that I made today, the NNOX options, I would put that on the spreadsheet, but I don't think you guys have any money left to buy those options. So I'd rather you not. If they go down, I'll alert it that you should buy some options. But what do I have going forward? I still have STX. I'm STX strong. I mean, that chart looks unbelievable. I like Tiger. Now, if I'm wrong about Tiger, which I hope I'm not, we'll find out next week. But I expect Tiger to quickly bounce back to the $28, $29, $30 range. And I expect it to go north of like probably $46 by the end of the year. So that's a pretty significant jump because we're at what, $26 and I'm saying 46. That's a $20 move. That's probably like an 82% move. All right. So please, if you watch me so far, and there are a lot of you out there for a Friday, please hit the like button. I really don't ask much. I ask you to join my platform if you take a chance on yourself, or you think that you're hearing something, or you read something on the side comments that tells you, hey, this is a community, because that's what we built. When I talk about 349, it's 349 trading, but it's a family. I'm building a family, and I'm inviting you to come into our family. We help each other. Let's get to some questions today. Sounds good, huh? All right. The funny thing is, I don't really follow those stocks, but I'll tell you what I think about Dunkin' Donuts right now. Or it's not Dunkin' Donuts, right? Well, it was Dunkin' Donuts. They went private 6 years ago, all right? And nobody liked donuts because they're all on health food kicks and stuff like that. So I think they're probably doing something good. If they're taking it public, they're definitely looking to sell their shares and make money. And when they take a stock public, they don't offer you 100% of the company. What they do is they take the company public. They say there's 100 million shares and we'll make 20 million shares public. And they'll hold the other 80 million shares themselves. So when the 20 million shares goes up 20%, they'll start putting their shares onto the market and making more money. They're just like the institutions. Anybody that owns these companies and they put their company out there for an IPO, do you think they're saying, we're making a shitload of money, we're going to make it public so that we can share our profits with you? No. Companies go public because it adds to their valuation, and it means all the CEOs, CFOs, everybody that was involved from the ground floor is finally going to get paid. When your company goes public, that's called a payday. All right. So when you're looking at these IPOs, I'm a little weary. The only IPO I wanted to get involved with was Roblox, because every kid I know uses Roblox. And I think the IPO was like 70 something. It shot up to 90. I bought in 3,000 shares at $65, and I sold them at what, $92. After I sold Roblox at $92, what did it do? No, it didn't go down. It went to 104. The point is, I secured profit. I was happy, and I was out. It could go higher, just like Sorrentino Therapeutics yesterday. It spiked past 11. I don't care. I was out. I rang the cash register. All right, so DNUT, there's no chart to look at because they became public. I think it went up, and then today it had a drawback. So you have to understand, somebody that got in, I'd be careful. Here we go. If you get involved with the IPO and it goes up and you're up like, let's just say 15, 16%, maybe you got in cheaper because you got the IPO pricing. The point is, there's usually a sell-off. There's usually consolidation. And then DNUT will probably find its floor where it makes sense and then kind of proceed from there. Again, I love donuts. So if DNUT wants to sponsor me, that's cool. I'll eat 12 donuts per episode. It would be a great plug for them because this shit's going to blow up. The other one, what is it? U1. I think that's like I'd rather just look up U1. I think one's like a Warren or something like that. Let's say U1. Urban One and then Urban One. Yeah, the K. I'm just gonna look at Urban One. Let's see. Urban 1K. Let's see what the difference is. Okay, I don't really know what the difference is. But I can tell you both the stock and the other one look the same. Volume is so freaking light. I don't know what the real valuation is. I used to hear people talk about this when Biden was going to get elected, and they would talk about how like black businesses and black radio and minority-owned things are going to get all this money from the country, that they're just going to hand out money. That's not the case. And I think they probably pushed the stock. Let me see. Yeah, they pushed it up to like 6 and change. I mean, the chart looks decent if you look at the year chart and zoom out. So if you'd like to hold this stock for over a year and just the stock, then yeah, you might be able to make like $3 would be like maybe 55%. So if you hold it a year from now, I think U1K will go up like 55%. But the point is, I like options. I don't even know if there are options available for that. Yeah, there look to be options available, but I don't know what's happening quickly. So when I tell you it might take a year to make 55% on the stock, I would never trade options in that stock. Too low volatility. I mean, there's too low volume. All right, next question, please. Hey, what's up, Russ? Russ said something today. Somebody said something to Russ, said something was on sale. So Russ said he entered a lot of orders, okay? Now, Russ worries me because he's a lifetime member and Russ has FOMO. So Russ sees something that everybody else is getting into and he goes, I want to get into that, and he pays too much. Now, today he mentioned in a tweet that he had a lot of orders out there that were ready to be executed, and I think he said only a couple or a few got executed. So I assume it's 2 or 3. And I told him, congratulations, because that is smart. If you put in a bid and it doesn't get executed, you shouldn't be down on yourself. The only thing you should be doing is applauding yourself because you just saved money. You were trying to get the best sale price available. So if it doesn't get executed, that means your sale price was so good. All right, anyway, great. Let's move on. Yeah, everybody have a nice weekend. Let's not forget about that. And then Monday as well. So it's a 3-day weekend. I appreciate that. All right, let's see what we got. What's the best way to average down with a $1,000 account? I find it difficult to trade more than once you put. No, that's the perfect that you answered your own question. You should not be trading more than 1 or 2 positions. Why? Because let's say you follow my rules. Let's start with 1,000. Let's say you only trade 1 position. I'll use you as an example, okay? You have $1,000. It's all in cash. I say, hey, I like Tiger. It's the option is $3.60, right? You buy it for $3.60, just one of them, okay? Then it goes down to $2 today. And what am I telling you to do? Buy 2 more. So now you're in for $760. You have 3 contracts, so your average is like $242. The option is currently at 2. When it bounces back to $3, which is still 20% less than what we paid for it, right? When it bounces back to 3, you're going to be 18% profitable. So you only need to trade 1 position because that allows you to average down the correct way. Now, here's the problem with people. Some people on my platform, they might have 2,000, 5,000, 10,000, and they put in 5,000 into one option play, 5,000 into another option play. They have no money on the side to get back. And let's say both option plays are currently down like 20, 25%. And they're thinking like, I've got to average down. Do I sell this one to support this one? Do I sell this one to support this one? And then what happens? They sell this to support this position and they average down, right? And then what happens to this option? It spikes and they're like, oh, I'm such an idiot. I should have sold this to cover the other one or whatever. So yes, no matter your account size, it's sometimes good to be in 1 position, maybe 2 positions, something like that. You make sure you understand the flow, because what do I teach in my platform? I teach about planning ahead, meaning you buy a contract for $250 and you're looking to sell it for 50% gain. So you're going to put in the order. As soon as you buy the 1 contract for $250, you're going to put in the order to sell it at $375. If it happens today, great. If it happens Tuesday, great. If it happens Wednesday, get what I'm saying? Every day you put in the same order to make the 50%. The day that the cash register rings, you're like, okay, next trade. That's as simple as it is. That's exactly what we do. Please hit the like button. Here it is. Hit the subscribe to our channel. I mean, we get a lot of views. Most of you, or I'd say some of you are subscribed. Oh yeah, you got to turn on the notifications to realize when I go live. So hopefully that helps you. But anybody, even with a bigger account, say you have $10,000, right? That way you can still trade 1 or 2 positions. You don't need to trade 5 positions. You need to be able to average down quickly. All right, next question or comment. Let's see what we got going on here. What is my outlook on Tiger for next week, Matt? We'll run to 29 possibly. Okay, yeah, so I'm going to give you, I mean, since I love to talk about Tiger. Now, understand this, right? So we were following Tiger on its way up from $9 all the way to $22. And then the volume went away and it went down to $16.50. And then it was working its way to $16.50, $17. And then Futu came out with earnings. And I said, Tiger is like Futu. It's like Burger King and McDonald's. It'll be a week behind. And I think it was May 25th. They came out with earnings and they had 5 straight heavy inflow days. Okay. So I happen to like Tiger a lot. I think they generate a good bit of capital. They were involved with the DD offering. I don't know how much of that worth, but again, they charge transactional fees. That's how they make their money. So let's look at the chart right now. All right, so we got a double top forming. That's what we have. I assume that the next time it goes up, it's going to break that top of $29 and explode. That's why I say I think it's going up, to like $50, $45, $50 by the end of the year. There's been 3 straight selling days, and if you add the volume from all 3 of these days, they equal the last selling day that happened on June 12th. That's the same volume. So you combine 3 days in a row. That's why I'm saying I don't pay much attention. When they're light volume today, and it's down 2.29%, and it was light volume yesterday when we entered into a position. What was it down yesterday? Like 8%, 9%, 9%, I think. So it's down 11% on such light volume. So I'll combine all those 2% is down 11%. I know that when this stock pops On green days, it gets 8%, 10%, 12% to the upside. So yeah, I'm looking for a good week next week. No doubt about it. I like this chart and it looks good. I look at the 1 month chart, the 3 month chart, and the 1 year chart. The 1 year chart looks like this, one mound, a little higher, and it looks like it's getting ready to go on its third mound. Now, I'm not sure it's done bottoming out, but it seems to quickly switch. So I'm assuming, I don't know if it's Tuesday, Wednesday, or Thursday of next week. Maybe we have to wait another week. Again, we know how to average down. Episode 37, if you're looking for max profit. Episode 42. If you're not part of my platform, please join. It's only $3.49. And if you're just such a happy person, share it. Pay it forward. Share this broadcast with somebody. If everybody in my platform shared it with 2 people, that would be like 2,500 new people that were just viewing it, all right? If just a small percentage joined our family, it would grow. Remember, we're all there to help out each other. Now, when I enter into an option position, remember, everybody chooses their own exit point, okay? I can't trade your accounts for you. I'm not a financial advisor. I can only share through transparency what I'm doing. So when I tell you I'm looking for an exit strategy of this, if it works out, great. If not, if I update it like I did today, I was like, no, I'm looking for 20% more. And then I got the 20% more. I could have got 30% more. I'm so upset at myself. Yes. So I think Tiger could run. If it runs, I just said what? It could run anywhere from 10 to 18% next week. Let me do the math real quick. Yeah. $29 is very viable. Keep in mind, it was $27 today. I think it was $29 when it spiked up yesterday before it declined, or maybe that was 2 days ago. Maybe it was Wednesday. The point is, stocks will go back. You have to zoom out. It's been like 3 days of selling, very light volume. The first inflow day, say we get 8 to 10 million shares. This stock will spike like 12%, 8%, 12%. All right, next question, please. All right, after my one-on-one with Matt. Oh, hey, Ellie, how you doing? Of course, I've been trading smarter. Back to square one. You have to abide by those small gains, turn to bigger gains. Matt is one of a kind. Okay, so let me just tell you what her and I talked about, okay? Ellie and I spoke about her trading because she used to reach out to me on the side and say, hey, look, I'm up 60%. And then I would look at the position. I'm like, no, you're not. You're only up 20%. And then we'd continue on a conversation, and then she was down 20%. So I had to explain to her that you must lock in profits. You must plan ahead. Let's talk about Sorrentino Therapeutic yesterday. When it spiked to 1066, I locked in profit. Yes, it went higher again. So I missed out on some bags. But the point is, I locked in profits. Now, if I was still holding yesterday at 11 and then I held into today, it would be $9.88. So all my profit, all my 69% or 68% would be gone. It would be gone and I'd be holding the bag. So again, you must lock in profit. When it dips, you can re-enter the position. If you like, no one's forcing you to re-enter the position. I've traded Tiger probably like 24 times this year. Probably more. I should actually look that up. All right, next question, comment. Thank you, Ellie. And everybody have a great weekend. Okay, let's see. I sold my Tiger calls at a 20% loss. Woo. Okay, so your indicators show a bearish breakthrough. You went all in with Berkshire options expiring in September. Okay, I'm assuming Berkshire Hathaway has good positioning in their stocks. I'm also thinking that money that you set aside is like a separate investment. It's almost like going long in a stock. When you find an option, a stock that you like, you can go out. What did you go out to? September. You can go out to September, October, November, January. I'll tell you how I did it with Apple. Rather than throwing $100,000 into Apple, I bought $30,000 worth of options that expire in January of next year of 2022. They're in the money. Yes, I paid up, but Apple went up like $3 or $4 since I bought them. So guess what? I'm making money. That's what I look for. Yeah, that's a good idea. I disagree with you about Tiger. That's me. But if I see more selling, and volume would have to be double or triple. If volume was at 9 million today, and that's what Tiger did, then yeah, I might reconsider. If volume was at $9 or $10 million, I was telling you shares yesterday, then yes, I understand that. But if you combine the 3 selling days, that only adds up to 1 bad day. The last time that happened, it bounced. I know the Nasdaq is strong. Why? Because we're at all-time highs. I know this is a fintech company that makes money off transactions and other things. So I like it. They actually allow the Chinese people to trade U.S. stocks. I mean, how great is that? Our market's great. All right, next question or comment, please. All right, 349. What are my thoughts? Okay, so this is a great question. I'm glad you asked this one because out of all of these companies, Neo, Xpeng, Lee, Ride, Workhorse, CCIV, they're all decent companies, but I have seen the demand for CCIV, and here's how I can tell you. Workhorse fell like 10% today. CCIV, I think it fell like, 2%, maybe even less. Did it bounce at the end of the day? I have it on my watch list because I actually like it, and there is demand. I don't know where it is, though. It's definitely here someplace. All right, CCIV. Let's see what it was off. It was off 2.53%, okay? It was off 2.53% off 70 cents today. So let's look at the 1 month real quick. There's been outflow for 2 days in a row ever since it spiked to its new high, which was the day we had a struggle. In the last month, it is up 25%. Oh, so if your stocks are being beat up, anybody that's in stock, let's use Tiger for an example again, or any other 4-letter stock that's like that, or CCIV that pulled back, or NEO. NEO went to 45, then it pulled back to like 48 today, 48.50. Maybe it closed at $50. I don't know where NEO closed. The point is, there was so much money made in these stocks. If your company spiked, there's called consolidation. It's called profit taking. So anybody that's like, what's up with these stocks? We just went into the third quarter, so everything is new. All the books are new, meaning everybody, all these hedge funds, institutions that have to show their records, or any mutual funds or stock funds or ETFs that you're involved in, they have to show their position on the last day of the close of the quarter, okay, which was June 30th. Then we went into July 1st, which was what, yesterday, right? We're July 2nd to no, what are we today? I don't even know what we're at. Anyway, so they have to put new stuff on their books. They get rid of their stuff. Anything they carried in to June 30th, the end of the quarter, they could have got rid of today, yesterday, the other day, and then they're looking to reinvest into new positions to build up that portfolio. So if your stocks are beating down, it's going to end. I'm not saying it's going to end tomorrow, but I have certain stocks that I know I'm positioned well for next week. But again, I like Roblox, I like eBay, I like NNOX. I mean, there are so many. If you're following my platform, you can look at my spreadsheet. Hey, love, you're good here. I didn't think you were going to show up today. It's okay, people. Our stocks are beat up. Remember why we went into the position in the first place? Yes. So somebody that told me they sold something towards the end of the day, or they exited out of STX at like 1 p.m. I was like, no, it's finally starting to change around. Now, remember, we got into STX because it was beat up. It had 13 straight outflow days followed by 1 green inflow days. It generally takes a stock 2 to 3 weeks to turn around. I thought XTX might move sooner on Micron's earnings. That's why I bought some options that expired today. But if you're part of my platform and you follow the rules, you go out at least 2 weeks. So you're July 16th, just like the alert. July 16th options, $87.50. When STX is $94, those options will be worth $6.50, and we'll return a couple 100%. Yes, but understand why you're into positions today, because they're beat up. Okay, yes, AHT, no. Oh, that sucks. What, $3? You're down. No, I don't want to average down on. I don't want you to average down on that. Why would you average down on that? Isn't like the worst performing stock. There was a reason when I mentioned that stock, we didn't get involved because I did not like the chart. Oh my God, it's under $3 now. It's $2.88 in after hours. So you've lost over $1 in after hours, and you're asking me, should you average down? Average down a while ago to buy out the August. No, please. I mean, I don't know what the problem is with this stock. Heavy outflow. It could literally probably go down to like 270. What is it at now? 286. No, so I wouldn't be selling at 286 when the market opens up on Tuesday. If your stock is $2.86, I would not be selling. I don't know if I'd average down because you have to tell me why it went down from $5 to $2.86. I mean, it lost half its value. Let's talk about Jim Cramer real quick. He mentioned Torchlight, and they're merging with MMAT, right? And then what happened? They did a reverse split. So the true valuation of Torchlight now is like $3.20. He gave out the stock when it was $10 to $3.20. He gave out Micron. Micron lost 6.5% yesterday off of great earnings. The dude is a jinx. If he likes your stock, tell me, because we'll short it together. All right, I would not do any more damage on that stock. Please, you have to be careful. Remember, we don't throw good money after bed. Now, if you see it rebounding, if you see it start to bounce back, right, then maybe you could take a shot with some August calls, thinking by August, maybe it's $5, maybe it's $6 again. Again, maybe it's $5. So if it's $5 in August and it's what, 286 after hours, that would be like a 40% gain. So you wouldn't buy the $5 calls. If you choose to average down, you would buy the $2.50 August calls or September calls or whatever's out there, and you double your money. So if your initial investment was $500, you would take $1,000 or $1,200. Now that, again, the stock has to go up. If the stock goes to zero or it goes bankrupt or something like that, I can't help you. All right, next question. Is the membership okay for a newbie? Yeah, I mean, it's for everybody. It's for the simplest people in trading. You're new. You've been in a week, 2 months. I have people that have been with me 20, not with me, but they've been trading for 20 years. So it's right for everybody. And I'm not trying to sell you. I'm not trying to take your $3.49. My strategy works. So even if you join my platform for 4 weeks, right, it's $14 then, and you only make one trade all month because you're a newbie and you don't want to get yourself in trouble. But on the one trade, you return $250. Guess what? You just paid for like 18 months of my platform. The point is, it's so inexpensive because I want you to learn. So a newbie would go to my website, sign up, and then read all of my rules. I have rules about stocks. I have rules about options. They talk about when to enter and how to enter based on the amount of money you have. So we have people in my platform that had under $100, like Romeo, that went down to $84, and then now he has plus $9,000. He took out $3,000 the other day, so I think he's at like $5,800. But he took out the money. We had Love, who blew up her account, was just making a comp before, and then she worked her account from $854 all the way up north of $50,000 in 5 weeks. So yes, newbies are okay. You don't have to enter every single trade. The trades on my spreadsheet are trading about 80%. Now, granted, I probably have, let's see, about 9 trades open right now, and I think I'm probably like 5 and 4 right now. So if we incorporate that, it would probably take me down to like 79%. But the trades aren't closed yet. I still have 2 more weeks for STX, and I believe that trade will earn me 100% instead of being down 50% like it was, and then we rebounded a little. Yes, I think that'll be a good trade. The trade that worries me, okay, is EBON, EBON. Why? Because crypto and other platforms are doing okay, and this company just has this like cloud over them. Again, I own stock and I own options, and I don't like to badmouth any companies, and I hope I'm wrong. But every time I expect a movement, they just sell off into it. So I don't know if it's shorts just holding it down and pocketing all their call money that they write covered calls or whatever they're doing. Not covered calls, but they write calls. Anyway, so yes, newbies are good. But continue to watch my videos. I gave you at least 5 videos to watch. 3, 8, ask Matt. 3, 8, 14, 17 was good. 21, 37, 42. There you go. Take a pen. Matt, how do you determine when to buy more in the money calls like NNOX? I bought 20 instead of the $30 one. Okay, because I understand my NNOX call is more of a safer play. If I wanted to risk NNOX, I could have went $30 or even $31. I could have went out some more time to give myself some more time, but I'm looking for instant gratification. Meaning, I believe NNOX, and I'll tell you what happened with NNOX, and then I'll tell you how I chose the price target. Let me look at it real quick. I believe it's been sold off for either 3 or 4 straight days. So I'll look at the 1-month chart. Yeah, and that's what I saw. Outflow for 4 straight days. Understand, since June 17th, every day of volume has been around the same thing, 700,000. On June 17th, it looks like we had volume of like 12 times that, okay? And the stock shot up to $30 and like 50 cents, where we are now, which is why I think NNOX is done going down. 4 straight selling days, I believe the same people that were buying before will continue to buy and push it north. So it's at $30.48, down $1.27. What I said to myself is, if it goes down $1.27 from where it is now, $29 will still be in the money. Meaning, if it moves north, I'm going to get most of the movement north. Whereas if I bought like 30 or 35, or even this dude on my public Twitter said, I bought $35 calls that expire July 16th. And I said to him, dude, I mean, good luck. I like the stock, but why would you buy $35 calls? I'm just assuming they weren't free. So you had to pay some money. With that said, he needs the stock to go to what, $36, $37 in 2 weeks. I mean, I'd be happy if it goes to 34 in 2 weeks. So let's say I'm ecstatic. It goes to 34 in 2 weeks. He's still getting 0 for his options. His money would be completely lost, and the stock would move 20% north. If your stock moves 20% north and you lose money, that's a bad investment. All right, next question, comment, please. Not a question, comment, but please, if you're watching right now, subscribe, hit the like button, and turn on the notifications. Please, that's the only way you're going to hear about me going live. When I drop a video, you'll be first to know. All right, yes. So have a great 4th of July, everybody. That's from Carlos. It is quitting time, and I love everybody, the family members, and let's grow this family. Pay it forward. Please share this video with someone. If you like it, make sure you hit the like button, all right? Everything's analytics, and everything we do is organic, which means we don't spend money on marketing, and yet we're trying to grow the family. Thank you, guys. Have a good weekend.